Hi everybody, Jonathan here, March 6th, 2012. Going to be talking about the market in February of this year, what we just went through compared to February of 2011. The numbers have come in, the monthly numbers have come in, and as expected, the market is still rapidly increasing. If you're from a seller's perspective anyway, prices have increased again, sales have increased again, number of days on the market have decreased. So in essence, it's a seller's market. However, I mean, you could look at it as being a buyer's market as well because interest rates are so low and the monthly mortgage payments are relatively affordable still. The numbers from this month relative to last year this month, sales have increased 16.1%. Prices have increased by 8.9%, and the average days on the market has decreased from 27 days to 24 days. So again, like I said on my last video, this will continue as long as interest rates stay low. But I think also it's very important to note that it's not just a matter of interest rates and where they are, but it's also a matter of inventory, the matter of supply. It doesn't matter what interest rates are at if there's a lot of product on the market. If there's a lot of product on the market, it'll give buyers more flexibility, it'll give buyers more choice, and ultimately it'll give buyers more negotiating power. But because that's not the case, because properties on the market are very, very scarce, very limited, buyers don't really have much of a choice in terms of the selling price. And often, and I've never seen this much action before on listings where they ending up in a multiple offer situation, bidding wars, and oftentimes the buyer has to pay either full price or over the asking price. It's kind of hard for a buyer to digest, especially if they're a first-time buyer. However, that's the case right now, and as long as the monthly payments are affordable in the buyer's perspective, then I mean, that's just a decision that they're going to have to make. This will continue as long as inventory levels stay low and as long as interest rates stay low. But also one thing to note is, I mean, the market stats that we get is Toronto based, so it's very, very, very big average. It incorporates the best areas of Toronto and the worst areas of Toronto. However, if you specify, if you look at each area individually, those numbers will change. What I want to say is that there's still opportunity out there. There's still areas that properties aren't selling over asking and properties aren't selling overnight. It just depends where you look. So when wanting to know what your house is worth or if it's worth it to sell, you have to look at, number one, not only comparables, meaning what houses have sold for in the area, but what's available in the area. If there's nothing available in the area, you have a very, very good chance that you're going to get top dollar. If there's a lot of properties available in the area, you must price it well or your house will sit on the market. So it's important to notice and see where you live and what the activity level is in that specific area. Looking at Toronto in general is just a general number that you're going to get in the end. So be specific to where you live, and you'll come up with a more accurate forecast. That being said, again, seller's market, interest rates stay low. It'll continue being a seller's market throughout this whole year, and that's just the way the economy works. Lack of supply, again, buyers will have to probably bid on their purchase. That's how it's going to be, and I hope that things change in the sense. I hope that things plateau a little bit, prices stay where they are, and it gives buyers more selection. In any event, you can check out my blog for more information and more written stats for the actual numbers if you want. Shoot me an email if you have any questions at all, and until next time, guys, take care, and we'll see you shortly.